So, hello evening. Hello everyone. Good evening to all. Just confirm me once in the chat box that sir, my voice is audible. Okay, sir. Thank you for your response in the chat box. Let's start our discussion. In our last session, we have done the concepts of value of supply. Section number 15. 1 plus 5 is equal to 6. That is value of X valuation under GST. And your transaction value will become taxable value if the buyer and supplier are not the related party and price is the sole consideration. If there will be any loading, unloading, incidental expenditure, the same will become part of your value of supply. Also, if any expenditure which is the responsibility of supplier but the same has been made by recipient, in that case also the same is included in the calculation of value of supply. Then after we have done a concept that's suppose there is a specific situation in which price is not the sole consideration. Okay, that means money plus monetary. So we have done the rule number 27, and that rule said you can take the open market value. If the open market value of this product is not available, in that case you can take the money plus monetary value, and if the monetary value is not available, in that case you can take the similar product open market value, and if the similar product open market value is not available, in that case refer rule number 30 and 31. So we have rule number 30 and 31 is the master key, you can say. Okay, next scenario. This value of supply is very important, so I require your attention on the next rule, rule number 28, in which, sir, first condition was price is not the sole consideration. Second condition, buyer and supplier are not related party. Now suppose if buyer and supplier are related party, suppose buyer and supplier are related party, in that case how the value will be determined? Because if we'll take the transaction value in case buyer and supplier are related parties, so there may be chances of manipulation. Okay, so first thing which we need to learn, that is what do you mean by related party? So related party means same pen but different GSTN. Same pen number but different GSTN. Suppose I have GST number Jodhpur, Rajasthan. Okay, and I have one GSTN. Suppose I have another GSTN as Gujarat. Okay, but the PAN number is same because the GSTN has been taken under my PAN number. So the PAN number is same in both the scenarios. One is at Jodhpur, another is at Gujarat. Okay, so this will be treated as related party or distinct person. Now in that case, first we'll try to understand how the manipulation will be possible. If buyer and supplier are related party and government said that your transaction value will become taxable value, then what will happen? Suppose Sachin from Jodhpur GSTN has transferred one goods to Gujarat. The actual value is suppose 10 lakh rupees. Actual value is suppose 10 lakh. But Sachin is saying from Jodhpur that yeah, if I am transferring the goods at 10 lakh rupees, in that case I have to pay GST at the rate of 18%. Suppose the rate is 18% on that goods, so I have to pay GST around 1,80,000 rupees. And in my electronic credit ledger there is a balance only 1 lakh available. So if I will transfer this product at 10 lakh rupees, in that case I have to pay cash to the government. Okay, and Sachin has also observed that my branch, which is situated at Gujarat, that branch has already the excess input tax credit balance. That branch has already excess input tax credit balance. So here in Jodhpur I have to pay the cash, and the same amount will be accumulated in the credit ledger of Gujarat branch. So there may be issue. It will unnecessarily block the working capital. So Sachin has made one plan that this Jodhpur GST is also belongs to me, Gujarat GST is also belongs to me. So for showing in the books of accounts, we'll take the value of this goods at 5 lakh rupees only. So the GST will be 90,000. and balance amount will understand in the terms. So in that case, there may be chances that the Jodhpur GST has transferred the goods as 5 lakh rupees and pay GST 9,000 rupees and adjust the same through the electronic credit ledger. This type of manipulation is possible. Hence, government implemented this specific rule and said that if the buyer and supplier are related party, in that case your transaction value not become the taxable value. You have to determine the transaction value or taxable value as per the rule number 28, which is applicable in case of related party and distinct person. So this rule number 28 is saying in case of your related party, this 28 is saying in case of related party, first thing which you can take as your value, that is open market value. Because the suppose the goods which I am transferring to my sister concern is available in the market, so I can take the open market value. Okay, now I am taking the transaction at 5 lakh rupees and the open market value of that product is suppose 10 lakh rupees. Government is demanding for 10 lakh rupees. Next. Yes, sir. Only distinct person will be treated as related parties. In case of holding and subsidiaries, the GST number and PAN number is different. Okay, so we cannot treat it as a related parties. But if the situation shows certain type of adjustment through that particular transaction, in that case, yes, government may ask the questions on account of value determination. Okay, so first thing, that is open market value. Suppose the open market value is not available in the market, in that case you can take like kind, quality and quantity value. And if the like kind, quality or quantity value is not available in the market, in that case we have master key rule number 30 and 31. जिसका सॉल्यूशन किसी के पास नहीं है, उसका सॉल्यूशन रूल नंबर 30 and 31 के पास है. So this 30 and 31 is the master key for us. So rule number 27 will applicable when the price is not sole consideration. Second, rule number 28 is applicable in case of related parties, distinct person. Now, sir, third situation, manipulation is possible. Yes, sir. Different GST and management is same and PAN is same. Related party, distinct person. Now, sir, next example where the manipulation is possible. So government has given all these rules in the specific situation where they found that there may be chances of certain manipulations. Hence, they implemented certain rules for the determination of value. So, sir, there may be chances in case of principal and agent. In case of principal and agent, there may be chances of manipulation. The same type of manipulation where the principal has a less balance of input tax credit. So principal may transfer that goods or services at a lower price so that agent can get the input tax credit with lower amount, but the principal save themselves to pay the taxes in cash. So that is what is the thing which is also possible in case of principal and agent. Now, so whenever there will be a transaction in between the principal and agent, your transaction value will not become taxable value. You have to determine it, and for that purpose, the principal is first, which is very common, that is open market value. If the same price is available in the market, then take it from the open market value. Okay, we'll take it as a value of supply. So first one is my open market value. Why they are considering the open market value? Because these rules are just to save the revenue of government from manipulation. So first thing, which is open market value. If the same is not determined as per the open market value, in that case the other option, government is saying that the goods which has been transferred, by the principal to agent, definitely and but obvious, the agent is going to sell the same in the domestic market. Am I right? Because when the principal has supplied a particular goods to an agent, then but obvious like agent is going to sell the same in the domestic market. Okay, so government is saying whatever price, whatever price which has been charged by the agent in the domestic market for the goods, for principal you can take the value of supply 90% of the value which has been charged by agent in domestic market, because agent is going to sell the same in the domestic market of the actual price. Okay, on that agent is also going to add their market margin. So government is saying will treat that agent, that margin of agent as 10%. So whatever will be the selling price which has been considered by agent for the domestic market, 90% of that will be the value of supply for principal. And suppose open market value is not available, the selling price for the agent is also not available, in that case refer rule number 30 and 31. So manipulation areas are possible in case of your price is not the sole consideration, in case of related party, distinct person, in case of principal and agent. Okay, and we have learned a very specific things that, sir, if the 27, 28, 29 is not able to decide the value of supply, in that case you can refer rule number 30 and 31. Sir, what do you mean by this rule number 30? This rule number 30 is saying that when a supplier is going to make the supply, when the supplier is going to make the supply, whatever will be the cost for that supplier, and cost we can identify from the books of accounts. So whatever will be the cost of the particular supply for the supplier, you just need to add 10% in cost. 10% of cost will become value of supply. Government is deeming a profit margin of 10% on the supply and saying that whatever will be your cost, uske upar 10% addition kar dena, 11% of 10 cost will treat it as a value of supply. So this is my master key, in which the value is going to be decided on the basis of cost plus 10%. Okay. Example, suppose sir, I am making the supply of study kit. Okay, and suppose, as the government has exempted the same, but suppose that study kit is taxable. Okay, and that study kit has been designed by Mr. Sachin only, the same is not available in the market, so open market value will not be available. Similar quantity is also not available, because my examples are different, my coverage are different, so everything is different. So similar kind of study material is also not available. Okay, like memory technique book, not available in market. Okay, so open market value not available, similar kind book not available. In that case we have to go for rule number 30. So suppose the cost of the book for me is 700 rupees. Okay, and cost you can easily analyze through the books of accounts. So cost for me is 700 rupees. In that case government is saying, if you are not able to decide the value, in that case what you can do, 700 ka 10%, so 770 will be treated as your taxable value, and on that 770 you have to charge the GST. Suppose the rate is applicable at the rate of 5%, so GST will be charged on 770 at the rate of 5%. Is that okay, Suresh sir? Sir, departmental authority is going to check your cost. Okay, they are going to find the cost based on the purchase invoices, based on your documentation, based on your expenditure which you have made for making that specific supply. Okay, now one question, there may be chances one question in your brain that, sir, how we can identify that in this specific scenario we have to check the value. So while analyzing the financial statement or while going for the scrutiny of the ledger of your client, if you found any entry or any ledger account in which there is journal entries exist, that means suppose the goods has been supplied for 1 lakh rupees, payment has been received for 50,000 rupees, and for 50,000 rupees journal entry has been passed. In such a scenario you have to ask about the value, that's around which value you have charged the GST, and how you can consider this 1 lakh rupees as your value of supply, that we have to check. Second, while analyzing the financial statement, if you found any transaction in between the branch, we have to very much careful. If on account of analysis of the nature of business we found that the particular taxpayer has appointed multiple agents, so in that case the concept will be principal and agent. So in that case we have to check the transaction between principal and agent and the relevant valuation methodology, that the value which has been calculated is perfect or not. So how we are supposed to identify the things. Okay, now you are saying that one more example regarding the rule number 30. Although this rule number 30 is very easy, yes, calculation is very difficult for department, or when we are suggesting our client, this is also difficult. Suppose this is a pen, company is involved in the manufacturing of this particular pen. Okay, so I have supplied 1000 pen at the rate of 100, so the value will become 1 lakh rupees. Okay, now we have to determine the value of supply, because the point is that the same product is not available, this type of pen is not available in the market, the similar pen is also not available market. Okay, this is unique one, so the similar product is also not available in the market. In that case, how will decide the value? So for that purpose, government, departmental authority, or when we are calculating the value, we have to check the expenditure which is associated with the manufacturing of this particular pen, and the same has been associated directly or indirectly, we have to check. And suppose through on account of analysis we found that the cost of this particular pen, that is 1000 bunch, from costing analysis we have to calculate for per number, then after we'll multiply with numbers. Okay, we also have to identify the fixed cost, the variable cost, that also we have to identify. According the value is going to be determined, and on that value, suppose the value is 1,50,000 rupees, so cost plus 10%, so 1,65,000, but taxpayer is paying on 1 lakh rupees also. One more thing I just want to share with you, that sir, now departmental authority is also not checking the value, because still they are confused in the reconciliation, still they are stuck in the reconciliation in the calculation of GSTR 3B and 1. But in very near future, in next 1 to 2 days, when they got the idea about the valuation, the effect on the interest, liability and penalty, in that case they will focus on this particular aspect as well. So we should ready ourselves from now itself, so that we can ready ourselves for the future litigations, we can make the next necessary adjustment entries for our client as well. So this is the effect of this value. This example is okay for everyone. The second example, okay. Then after rule number 31, sir, rule number 31 is a residual rule. In this particular rule, no valuation methodology is given. In this particular rule, no valuation methodology is given. This rule is saying that you have to decide the value as per the circumstances of the situation and condition. Okay, so the normal principle is not applicable, that we have to decide according to the situation, and this particular scenario is completely based on the circumstances of the situation. Okay, now सर, आपने और मैंने, हम सब ने कभी ना कभी मेक माई ट्रिप से टिकट्स बुक करवाए होंगे. यू एंड मी both have booked tickets from make my trip. Okay. So multiple websites are available, easy trips are available, through that we can book the tickets. Paytm is also an agent so we can book the tickets from that Paytm app as well. Make my trip, easy trip, make Paytm, or multiple platforms are available through which I can book the tickets. Sir, these platforms, that is make my trip, easy trip, Paytm, they are also providing the services, am I right? So now question is that what will be the value? What will be the value in the hand of that make my trip? Because when you will book a flight ticket, okay, suppose I want to book a flight from Jodhpur to Goa. I want to book a ticket from Jodhpur to Goa. So I have booked my ticket from Make My Trip platform. Okay. So what Make My Trip is going to provide me? Make My Trip is showing that the flight prices is 15,000 rupees per person. Okay. And I have to pay that amount, and my tickets will going to be booked. In that case, the whole 15,000 will be treated as value for Make My Trip? Not at all, because Make My Trip is just providing the services. Make My Trip is just providing the services. So in that case, on that service charges, the GST should be applicable. Now question is that how the service charges will be calculated in case of Make My Trip, in case of Easy Trip, in case of the online platforms who is providing the services related to the air travel bookings. So government has given a very specific valuation rule. Okay. And this rule says in case of air travel agent, if the booking is for domestic means in India, 5% of basic fare, 5% of basic fare will be treated as value of supply. And if the booking is international booking, in such a scenario, 10% of basic fare will be treated as value of supply. So 5% in case of domestic, and in case of international, I am visiting Dubai. In such a scenario, the 10% of basic fare will be treated as value of supply in the hand of air travel agent. So that travel company is going to pay the GST on that 5%, on 10%. This is the thing which we need to keep in our mind. Because if we are working for any air travel agency, in that case, we have to keep this point in our mind so that we can provide the proper consultancy to the air travel agency. Yes, sir. If the amount you have decided as 5% or less than 10%, in that case, government may come up with interest penalty in future. Okay. Because GST is going to be paid on this amount. This is through the rule. Now, sir, insurance agents are also going to provide the services. So in that case, for that insurance company, on which value the GST is applicable? So what will be the value of supply in case of insurance company? This is also a question, because insurance company ke through we are supposed to take the insurance benefits. Okay, we are just going to take the insurance as like health insurance, as like journal insurance, as like marine insurance. Multiple type of insurance are there, and we are taking the same. So how the value is going to be determined in case of insurance, that we are going to discuss. Okay. So air travel agent we have done. In case of domestic booking, 5% of basic fare. In case of international booking, 10% of basic fare. Okay. Now, insurance company, in case of life insurance, how the value is going to be calculated? So many time what we are doing, we are paying amount to the insurance company, suppose 5 lakh rupees for the insurance. And when you will check the insurance policy, when you are supposed to check the insurance policy, you will found that company is going to invest the amount as 3 lakh rupees. Okay. And if you have idea about the investment which has been made by the company from your premium, if you have idea about the investment which has been made by the company from your insurance, in that case the value of supply will be treated as the amount which you have paid minus the investment which has been made by the insurance company on the remaining amount. On the remaining amount, the GST will be applicable and the same will be treated as value of supply. This is the first thing. Now, suppose I have taken a single annuity policy, okay, and in the insurance policy, they are not providing the details about the investment made. Investment made details not available, okay. Investment made details are not available, and the insurance policy is a single annuity insurance policy. In such a scenario, your 10% of the premium will be treated as value of supply. Suppose I have booked the insurance policy of 5 lakh rupees and I have paid 5 lakh rupees in one annuity. In such a scenario, 10% of 5 lakh rupees, that is 50,000 rupees, will be treated as value of supply, and that insurance company has to make the payment of GST on that 50,000 rupees. And suppose if the policy is multiple insurance premium policy, okay, multiple premiums are there, in such a scenario the value of supply in the hand of insurance company is, for first year, for first premium, you can say, for first premium it is 25% of premium will be treated as value of supply, and for all the subsequent installments, 12.5% of premium will be treated as value of supply. So first installment or first premium, 25% of premium will be treated as value of supply. So suppose my first insurance policy premium is 50,000 rupees. So 25% of that 50,000 rupees, that is 12.5%, that is 12,500, will be treated as my value of supply. Okay. So accordingly, we have to decide. And for subsequent installments, 12.5% will be treated as value of supplies. 6,250 rupees will be my value of supply. So in case of insurance business, total 3 situations are there. One is in which I have idea about the investment. So total premium minus investment, whatever will be the remaining amount on which I have to pay the GST. Second mechanism or second methodology which may follow, that is single annuity. In that case, whatever will be your premium, 10% of the premium will be value of supply. Third, if multiple premiums are there, in that case your first premium 25%, for remaining premiums 12.5% will be treated as value of supply. Sir, the concept is okay for you, and just let me know once, are you enjoying the session? Because we are covering the theoretical approach. So are you enjoying the session? Sir, investment means when the insurance company is going to take amount from you, okay, at the same time insurance company is also going to invest that amount in other options, so that insurance company can give back to you certain higher amounts. So that is called as investment. Okay. And I request, this insurance concept is very easy. Tomorrow also you will get the recordings, so you can watch it again, so that this concept will again be there in your brain. Okay. Although insurance, total 3 situations are possible. One, when you know the investment amount, so the premium minus investment, whatever will be the value, that will become the value of supply. Second scenario, वन इंस्टॉलमेंट आप पे कर रहे हो, दैट इज डन. इन दैट केस वन इंस्टॉलमेंट का 10% विल बी वैल्यू ऑफ सप्लाई. एंड suppose if multiple premiums are there, in that case for first premium 25% of the premium will be value of supply. For further premiums 12.5% of premium will be treated as your value of supply. Sir, why your liabilities depend on insurance agent? This is about the insurance company. Okay. In case of insurance businesses, if you will read out our book, in that case you will find multiple examples as well. So I request each one of you, after taking the sessions, just try to go through with the book relevant chapter, so that you will find multiple examples as well, and it will be very easy for you to understand the examples. Okay, because we are covering the practical scenarios. So insurance agent done, banking company, that is domestic booking, air travel agent done. Now in case of lottery, gaming, what will be the value of supply? In case of lottery, gaming, what will be the value of supply? As we all know that the lottery and gaming, the state government is going to select certain distributors for distribution of the lottery tickets and gambling related activities. Okay, and that distributor is going to supply the same in the market. Okay. Now state government has distributed that lottery to the distributor, and now distributor is going to make the supply in the domestic market. So question is that when the distributor is going to make the supply of that lottery tickets in the market, what will be the value on which that distributor has to make the payment of GST? That is what is the question. Okay, so government has given a specific scenario for the lottery. For the lottery, on that lottery ticket face value will also be there. Okay, 10 rupees, 20 rupees, 50 rupees, 500 rupees, 5000 rupees. So always there will be a face value. So in case of lottery, face value, this is one option that you can pay GST on that. Second option, sir, for the lottery tickets, state government is also going to fix the price and publish the same in the official gazette. Okay, you can check the page number 137. So state government is also going to publish a price in official gazette. So official gazette price, two possible scenarios: face value or official gazette price. Now government has given a relaxation for face value multiplied by 100 divided by 128, whatever will value come. So face value multiplied by 100 divided by 128, or the price which is published in the official gazette, whichever is higher, that will be treated as value of supply, and on that value that distributor has to make the payment of GST. That is what is the point which we need to keep in our mind. So if you get a query from a client who is dealing in the lottery tickets, in that case the value will be decided according to this specific rule, and when the rule is given, in that case the value will be determined according to the rule only. Okay, face value you can easily found through that lottery ticket, or official price you can check through the gazette. That is what is the option you have. Now next thing, next concept regarding the second hand goods. what will be the value of supply in case of second hand goods? Suppose I have bought a second hand plant and machinery, and I'm dealing in the second hand goods as well. Okay, so I have bought one second hand plant and machinery, and I have bought this plant and machinery for 1 lakh rupees, and I am supplying the same in the domestic market for 1,20,000 rupees. In that case, my question is that in case of second hand goods, I have bought the plant and machinery for 1 lakh rupees, and I am supplying the same for 1,20,000 rupees. In that case, on which value the GST will be applicable? When I bought 1 lakh rupees, I am going to supply for 1,20,000 rupees. So I am supplying at 1,20,000 rupees. So value of supply will be, in case of second hand goods, your margin money will be treated as value of supply. So 1 lakh minus 1,20,000, there is a margin of 20,000. So GST will be applicable on that 20,000 rupees. Now, suppose I have bought that machinery for 1 lakh rupees, and I am supplying the same at 1 lakh, no, at 80,000 rupees. So the margin is negative. I bought at 1 lakh rupees and I am supplying at 80,000 rupees. So margin is negative. In that case, your value of supply will be treated as 0. So no GST will be applicable in case of negative margin. That is what is the thing we need to keep in our mind. So rate will be depend on the product. Okay, rate is always depend on the product. Now, sir, suppose when I bought that particular plant and machinery for 1 lakh rupees, I have claimed the input tax credit. I have bought that particular machinery from a registered person. Okay. And I have claimed that input tax credit on 1 lakh rupees, and now I am supplying it at 80,000 rupees. In that case, my value of supply will be 80,000 rupees. So government is saying that when you have availed the benefit of input tax credit, at that time your margin money concept will not be applicable. This margin money concept will only be applicable in case where you have not availed the facility of the input tax credit. Okay. Now, page number 4, second hand goods. $140. Sir, we have already dispatched the books, or if you want the tracking code of the book, in that case, I am sharing the WhatsApp number. You can text on this number. They will provide you the tracking code as well. Next concept, which is also a very interesting concept. And after that concept, we'll conclude our today's session. Okay, because value of supply is quite technical, so I'm going to take the topics very slowly. Okay, pure agent concept. What do you mean by pure agent? Suppose I am providing the consultancy services. Okay, I am providing the consultancy services. So I have charged a fees of 1 lakh rupees for the consultancy. Okay, and while providing the consultancy to my client of that 1 lakh rupees, I have also paid a fees, government fees of 10,000 rupees. Okay, on behalf of my client. Okay, There is a due which was the liability of my client, but I am going to make the payment, or I have already made the payment of that 10,000 rupees on behalf of my client. Now, while preparing the invoice, I will take total 1 lakh 10,000 rupees. 1 lakh is my professional fees, 10,000 is the amount which I have paid on behalf of my client to the government. So in that case, now question is that whether GST will be applicable on 1 lakh rupees or 1 lakh 10,000 rupees. Just let me know in the chat box. GST will be applicable on 1 lakh or 1 lakh 10,000. Yes, GST will be applicable on 1 lakh only. GST, why GST is? Someone is saying 1 lakh 10,000. No, GST will be applicable on 1 lakh rupees only, because that 10,000 I am collecting from my client, that I have already paid to the government on behalf of my client. I have paid that amount as a pure agent. So when a supplier is going to make any payment as a pure agent, when a supplier is going to make any payment as a pure agent, in such a scenario, the amount will not be liable for the GST, and the amount will not become the part of the value of supply. So GST will be applicable 1 lakh only. Okay. So whenever you are making any payment of any amount on behalf of your client to someone else, the same you are paying as a pure agent, hence the same will not become your part of value of supply. This is the concept of my. Yes, sir. If the traveling expenditure, okay, for performing a particular task, we have collected this amount from our client, and we are just going to pay this amount to travel agency, or during the transportation we are paying. In that case, we have made the expenditure. Okay. No, sir, it will not be considered for turnover purpose. Why considered for turnover? Because this is not my supply, and when the same is not a supply, then how we can consider it for the turnover perspective? Okay. So first we'll determine that is a taxable supply or not. So we have put a cross on our first question, that whether it is a taxable value, no. Whether it is a part of taxable value, no. So it will not become the part of your turnover as well. Dhaval sir, that is completely depend on agreement. Okay, if we have a note with our client, okay, that the transportation expenditure will be beared by our client only, okay, and the same we are making just once, in that case, yes, the same GST is not applicable. Sir, plant and machinery, the WDVS 1 lakh rupees, and you have made the supply for 1 lakh rupees only. In that case, your margin money is 0. So yes, no GST is applicable, but as per the provision of capital goods, as this is a capital goods, so you have to reverse the input tax credit total ITC divided by 60 month or 5% or part of the quarter, that follow you have to follow. Okay, that will discuss in case of our discussion on rule number 42 and 43. Sir, pure agent concept, it's just a simple that this expenditure is not my liability. I am paying on behalf of someone else, and I am paying this amount to someone else. In that case, the same will not be included for calculation of the value of supply. That is what is the very simple concept. Okay. Sir, not only the government entity. Suppose for providing for making a particular supply, I have paid an amount to a specific agency, a private agency, on behalf of my client. That specific agency has given me an invoice of 10,000 rupees. That, sir, you have to pay. And client said that, Mr. Sachin, once you have to make the payment to the agency, then after we'll reimburse it. So why GST is applicable on that 10,000 rupees? Yes, sir. Gagan sir, separate documentation is required. Sir, mobile currency services will discuss. Yes, sir. Consultant received the amount and paid the GST income tax amount to the government. In that case, the same is a pure agent. That means the logic is only one. Any amount which you are receiving from your client and you are paying the same amount to someone else on behalf of your client, that will be treated as your pure agent. Okay. So we just need to keep this concept in our mind. You can check the language of rule number 32. The expenditure or cost incurred by a supplier as a pure agent of the recipient of supply shall be excluded from the particular value. Here they have not mentioned that the amount is on account of only government, not at all. If you are paying to a private agency, the same will also be considered as the amount as a pure agent. Okay. Sir, rule number 27 is applicable in case of money plus monetary consideration. That is, price is not the sole consideration. Rule number 28 is applicable in case of distinct person related party. Rule number 29 is applicable in case of principal and agent. So, sir, in our today's session, we have covered about the rule number 27, 28, 29 and the master rule, rule number 30, which is applicable when the rule number 27, 28, 29 not workable. Okay. So the cost plus 110% will be treated as value of supply. And also we have done the value of supply in case of your air travel agent. Okay. 5% of domestic fare and in case of international 10% of basic fare. We have done the concept in case of insurance company, life insurance company, the value of supply will be when you know the investment amount, so premium minus investment. If one single annuity premium and you don't know the investment amount, in that case 10% of premium, multiple premiums, so first premium ka 25%, another premium ka 12.5% will be treated as value of supply. Also we have done the value of supply in case of lottery tickets. Okay, so 100 divided by 128 multiplied by face value or the price which has been presented in the official gazette, whichever is higher, that will be treated as value of supply. Then after we have done the concept that how the value will be calculated in case of second-hand goods, so GST will be applicable on the margin money. Also we have done the concept of pure agent in our today's session. In our next session we'll discuss about the value of supply, how we can calculate the value of supply in case of foreign currency exchange. When we are visiting any bank, suppose I want to go Dubai, so I require dirham, I have Indian currency, so when I am going to the forex department of bank, I am giving the Indian currency and I am getting the dirham. In such a scenario, bank is not going to pay the GST on whole dirham which has been provided to me. Bank is paying the GST on the service charges. So how the service charges, how the value is going to be calculated, that we'll discuss in our next session. Also, we'll discuss about the applicability of GST in case of discount, the various type of discount, that is financial discount and trade discount. We'll also discuss that how the GST will be applicable in case of penal interest, in case of trade interest, how we can bifurcate the penal interest and the GST implications in our next session. And also we'll start our discussion on the great input tax credit section number 16 in our tomorrow session sharp at 7 p.m. So I request each one of you, please be there sharp at 7 p.m. tomorrow. Sir, subsidy will discuss in our next session about journal subsidy, about government subsidy, directly priced, directly linked subsidy, that will discuss in our tomorrow session. Recordings will be available by tomorrow. All the 3 days recording will be available by tomorrow. Thank you, each one of you, for joining the session, for listening with us. We'll meet tomorrow sharp at 7 p.m. Thank you once again. Bye bye. Good night. Take care.